This is the Scrap Metal Commodities Recycling Report by BENLEE and Raleigh Goldsboro Recycling, January 23, 2017. Last week, commodity prices were up slightly, while economic reports remained mostly positive. Looking at the left of this chart, steel production rose to the highest level in about 6 months, which was nicely ahead of last year. Oil rose $1 to $53 a barrel, which remains almost double what it was a year ago, and only about a third of the $145 a barrel of 9 years ago. With oil staying over $45 a barrel, we see U.S. oil patch jobs and steel used for rigs coming back. The oil rig count rose 29, the highest weekly rise in 3 years to 551. They're 74% above last year's 316 low, supporting higher steel prices. Iron ore ended down $1 to $80 a metric ton, less than half February's 2011 high of $192, but more than double the $37 a metric ton of 13 months ago. On the left, we see scrap ferrous prices rose a bit and remain double of a year ago. Importantly, higher scrap prices are bringing more scrap into scrapyards, which could mean stable to lower prices in the weeks to come, unless there is a major increase in exports or domestic use. Hot dip galvanized steel remains at $850 a ton, which is showing stability after months of increases. Stainless 304 scrap held at 36 cents, showing many weeks of stability as well. Copper fell 8 cents to $2.62, remaining close to the 18-month highs though. The 5-year copper chart shows prices over 30% higher than the multi-year low of about a year ago, driven by speculation after the U.S. election, not demand. Yet copper inventories have been falling for the past month, which could support these higher prices. Aluminum rose 2 cents to 84 cents a pound after rising for many months. The 5-year aluminum chart shows prices are hitting new about 18-month highs. Aluminum inventories, while low, continue to rise in recent weeks, which should support these stable prices. China's fourth quarter GDP at 6.8% was the highest quarterly growth in a year. Importantly though, 2016 growth in total was 6.7%, which while strong, was the lowest annual growth in China since 1990. December U.S. industrial production rose 0.8% versus November, the largest gain in 13 months. While great news, Q4 2016 in total was actually about 0.6% lower than 2015. Inflation in December was 2.1% versus last December, the highest inflation in 2.5 years. Higher gasoline and housing costs, which were key to this, which would be actually expected because of the doubling of commodity prices in the past year. December housing starts jumped 11.3% to 1.2 million units. For the past 66 years, starts averaged 1.4 million, and in 1972 they were 2.5 million. There are 54% more people living in the U.S. now versus 1972, so there is major upside to the 1.4 million, which is great news for jobs and would support stable to higher commodity prices. By definition, people aged 16 years and over that are working and are looking for work make up the labor force. The current 4.7% unemployment does not tell the full story of U.S. employment. In December, the U.S. labor force participation rate increased to just 62.7% from November's 62.6%. 37.3% of the people that could work are not working. The average for the last 46 years has been at 63%, with an all-time high of 67.3% in 2000 and a low of 58% in 1954. This is a major upside to the economy when we get more people working. Initial jobless claims were 254,000 last week. This makes the 4-week average 247,000, which is the lowest level since November 1973, 43 years ago. Terrific numbers. With that, we hope all have a safe and profitable week.